Bonds sell off as a worsening global trade war erodes already fragile appetite for risk. Let's bring in Shana Sissel now, CEO of Banríon Capital. Shana, good morning. Thank you for joining us. At least good morning out of London. What do you in terms of, are we seeing a regime shift when it comes to investor views about US assets? When we look at the sell-off in US Treasuries, particularly at the long end, when we look at the sell-off of the dollar, is this a regime change now?
I think it's too early to tell. A lot of people want to say it's a regime change, but one of the things I think hasn't been mentioned, and I've been watching your programming most of the evening because it's the middle of the night where I am, and I can say that one of the things that hasn't been mentioned is that at the end of the day, the U.S. consumer is a massive driver of the global economy, and it is the primary driver for why the U.S. has some leverage here. It's why the U.S. is always at a trade deficit. And so I think that we can't underestimate the power of the U.S. consumer and the power of the U.S. ingenuity. What it is doing is providing opportunities for potential competitors to come in other areas. And I saw you were talking about Spain earlier as it is pertaining to becoming a stronger trade partner with China. And those things are certainly happening. But I don't know that is necessarily a bad thing. It's a painful thing. But I do think a broadening of economic activity across the globe is better long term for everybody. And while this is quite a painful experience in the moment, it's very much too soon to say that it's a regime change.
OK, too soon to call it a regime change. Do not underestimate the power of the US consumer. Shana, do we, though, need to be pricing in some risk premium into at least some parts of the US asset space? Is that fair to assume that there will be a risk premium now priced in by investors to treasuries, to the dollar?
Absolutely. I think that there has to be. There's a lot of risk right now, and we're seeing whipsaws in the market because it seems to be changing every day. Markets hate uncertainty, and that is not helping. And in terms of treasuries and foreign investment in treasuries, I think that having a risk premium is an important aspect. And quite frankly, this presents a problem for the Federal Reserve here in the U.S. And I think that this activity is actually what's kind of forcing the Trump administration's hand. I think that's why you saw them take a very quick pivot, because the bond market is letting them know that the stance they were taking was not a favorable one. And we really need interest rates to come down here in the U.S. and the Treasury markets are not cooperating because of all the tariff threats and foreign investors staying out of U.S. Treasuries.
Shana, what buying opportunities are you seeing amid some of these dislocations?
So this gets me excited. As an investor, a long-term investor, every time in my career that I've ever made massive amounts of money, it's been in markets like this. And I think that as investors, anybody who wants to think about themselves as an investor, are they a good investor or not? It's the markets that are in stress that tell you how good of an investor an individual is. So for me, I'm looking at the longer term trends where tariffs, no tariffs or whatever, there are companies that have competitive advantages that will win in the long term. So I'm looking at some of the AI related stocks. So stocks like Vertiv, stocks like Marvell, stocks like Nvidia, and looking for ways that I can buy those stocks at massive discounts to where they were today. If I think about how this played out in 2008, the things that you were able to buy at huge discounts, particularly in the tech sector, ended up taking off like a rocket ship as we came out of that. So I think that the opportunities are going to be in trying to figure out who the winners and losers are going to be. And I think that we would be remiss if we didn't look overseas at the international markets. You know, we're coming off over a decade where U.S. markets have dominated. And that's not necessarily how it's always been. Having a regime change to having foreign and non-U.S. stocks and non-U.S. countries outperforming would be a good thing. So taking a look at on a country level, I'd be looking at stocks in South Korea. I'd be looking at opportunities in Vietnam and some of the European stocks that will benefit from being able to have better trade agreements with foreign partners because the U.S. is using tariffs as a threat and not making friends with our allies.
Shana, just briefly before we let you go, give us some names in Europe then that stand out to you at this point.
Oh, you're going to ask me to give names in Europe as if I follow European stocks. No, there's some healthcare stocks in Europe that I think are favorable. If you look at like a Novo Nordisk or an AstraZeneca, things of that nature, which are headquartered over there, I think that those are names that I'd be looking at in the pharmaceutical sectors. I think they're less likely to be impacted by tariffs. And so those are some of the names I'd be looking at. Not necessarily technology, but if you think about names where there's a demand for the product or service, and it's going to be something that's favorable. Tariffs, no tariffs, people will pay up for pharmaceuticals, especially those that are life-saving, and that's where I'd be focusing. In the healthcare sector, in particular, is an area I think is very attractive.
Shana, thank you so much indeed for staying up for us very early, of course, where you are in Chicago. Shana Sissel, with a view there that we should not underestimate the US consumer. Maybe some opportunities as well to add to US tech, opportunities in European healthcare. The CEO of Banríon Capital. There's plenty more coming up. Stay with us.